Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen, presented in 4 minutes or less. My first blip is looking at the daily charts for the NASDAQ and Philadelphia Semiconductor Index, or SOX, as today is Tech Tuesday. The NASDAQ is above its March 17th low at 2155. Today's support is 2214 with weekly resistance at 2363. My monthly support lags at 1980. The SOX is also above its March 17th low at 332.11. Today's support is 350.13, with semi-annual resistances at 378.50 and 381.45. My second blip gives investors updated profiles for Apple and Google. Apple is trading between its 200-day simple moving average at 163.80 and its 50-day at 180.15. My semi-annual pivot at 163.80 held at its recent low, and the upside should be limited to my semi-annual risky level at 192.18. Google is below its 50-day and 200-day simple moving averages at 563.97 and 576.38. Below this resistance is my monthly value level at 420.41. Above is the quarterly risky level at 601.85. Apple rates a strong buy according to automated stock alerts, but it trades well above fair value at 150.25. Google rates a buy, and it's well below fair value at 628.89. My third blip looks at the charts from Fannie Mae and Freddie Mac for my call for nationalization. For the purpose of this blip, I will focus on Fannie Mae, which was created in 1938 under President Franklin D. Roosevelt, at a time when millions of families could not become homeowners or risk losing their homes for lack of consistent supply of mortgage funds across America. The government established Fannie Mae in order to expand the flow of mortgage funds in all communities at all times under all economic conditions and to help lower the cost to buy a home. In 1968, Fannie Mae was rechartered by Congress as a shareholder-owned company funded solely with private capital raised from investors on Wall Street and around the world. I made the nationalization case for Fannie Mae on Fox Business on May 7th, and since then the stock is down another 43% to levels not seen since 1992. Mortgage underwriting standards need to improve, which should happen under nationalization. Fully documented, 20% down payments, and no more than 35% debt-to-income ratio. Nationalizing Freddie and Fannie would not be an entire nationalization of the mortgage market at non-conforming loans because of size and credit standards would still be private mortgages. My fourth blip looks at a daily chart for NYMEX crude oil as prices begin to slide. It closed below the 21-day simple moving average at 137.19 would be the first since June 4th, which indicates risk to the 50-day at 130.13. My monthly and semi-annual supports at 128.16 and 127.99. My opinion remains that investment demand from pension funds has been the driver of higher oil prices. It's not prudent for any asset class to be overweight to any one component, and the NYMEX crude oil futures account for 40.9% of all investments benchmarked to the S&P GSCI index. Pension funds beware. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.